Hey guys, welcome to the podcast. The stock market is now closed. Today is tax day, April 15th, but you honestly didn't hear a lot about taxes at all today. It was more about not only weak economic data coming out of China, or weaker than expected, I should say. Their estimates last night were for 8% growth to their GDP, and it came in at 7.7, which is very, very fast. But again, less than expected. And it's kind of a trend we're seeing in the last couple of weeks, not only in the U.S., but around the globe. As the economic reports are coming in, they're just not as good as people were thinking. And so the stock market was already primed to go down. And when you add on to the fact that gold, which had that really bad day on Friday, a lot of pent-up selling, a lot of margin calls, and we'll get to gold in just a minute, but basically gold was the story of the day, and it kind of pushed the markets down. So the S&P, as you can see here, finished down 36 points. 1552 is where it sits right now. The Dow Jones down about 265 points, about 1.8%, and small and mid-cap stocks got hit really hard, down anywhere from 3.5 to 3.8%. Treasuries rallied, not as much as you would have thought, though. And really what we saw today was a 1.8% drop. You can see these are kind of the daily changes in the Dow Jones. 1.8% drop. We haven't seen a drop like that since really, I think it was the day after the election for the Dow Jones. And when we go back to the S&P, we've had again, after the election, we had a pretty nasty day or so, but this was a big down day. And now when we look at the internals that I've analyzed after the market closed and kind of went through all the numbers, this wasn't a typical panic day. Now you may say, what are you talking about? We had indices down anywhere from 2% to almost 4%. We had gold pretty much crashing. How can you say it's not a panic day? If you look at the internals of the market, this didn't even classify as a 90% down day, which kind of shows a tossing in the towel. We didn't see that. Now, is that good or bad? Well, it's really bad if you're somebody looking for a bottom. If you're short, it's good because there probably is a little more downside because of the fact that, again, until we get to that point where everybody says that's it and they toss in the towel, you don't get to a bottom. And so it was one day, but it was a very violent day. And I think when you see gold down like it was, and if we take a look at gold, of course, finishing down the GLD 9%. And I think after hours, gold has been trading, down 10%. So just a really nasty 2 days for gold. And over the podcast over the weekend, we discussed the fact that gold had been in this channel, and I think for really well over a year, I think a year and a half or so, it had been in this channel. And so we said, it's likely that if buying's going to come in, it's going to be at this level because it was in this channel. And it didn't. It broke down. And when it broke down right here, you could kind of feel the stops being taken out. You could feel, the margin calls. And so when you think about it over the weekend, and I said I thought I had a pretty good chance of bouncing today because, you just don't see gold fall 5%. But lo and behold, we come back today and see it down another 9%. And so if you're somebody that's trading gold, the time to sell was when it broke out of this channel, obviously. Just like if it had rallied up to this point, the time to sell would have been, when it started to turn the corner here, that would have been the time to sell just because the pattern had been this zigzag pattern back and forth and back and forth. And now that is something that's changed. It's different now. Now, when we can argue fundamentally why this is happening, and by the way, when we look at the changes, the daily changes in gold going back well over a year and a half, 2 years, you can see that nothing comes close to even 5%. I guess we had one little March of 12, we had a down day that was around 5%, 6%. But to have it down 9% on top of the 5% from Friday, just unheard of type of numbers. And I did get some questions today. Is this the time to go in there and buy gold miners? I think we have to first examine that, I think Apple is a classic case of something that becomes overcrowded and it starts to sell off, and people start to bottom fish and say it's got to be a good deal. And I think with gold, of course, you're hearing the gold bugs say, this is what we've been waiting for. We've been waiting to put more money to work, and now we finally can. As opposed to admitting that the trade is a bad trade or hasn't been a good investment for a year and a half, you're going to hear those people say it's time to buy. And again, after the forced selling ends, and I think that's what you're seeing right now, it's not necessarily everybody wanting to hit the sell button. It's people that own gold on margin and maybe have for years on end are getting hit. And people that have bought gold on margin are getting hit. So it's forced liquidation. Then when you pile on that over the weekend, if you think about gold mining funds, they got a lot of redemption calls over the weekend. A lot of buttons were clicked that said, hey, get me out. And so they walk in the office this morning and they have all these sell orders. Well, how are they going to get the mutual fund money to the investor? They have to go sell gold, miners, gold itself, to get the cash to give to the investors. So selling on top of selling on top of selling. This forced selling, I think, is what you saw. Once that runs its course, you will see a bounce. But this trend and this break is in. And so any bounce you get for the short term may prove just a fall. And you know what this reminds me of really is the chart on Herbalife. Do you remember Herbalife? Of course, the kind of a pyramid type company selling health products, and you get two of your friends to sell it, and they get two of their friends, and pretty soon you go retire on a tropical island because you have so many people working for you, so to speak. And so, there was this, I think Bill Ackman, one of the activist hedge funds, was saying this is a Ponzi scheme and blah, blah, blah. Well, the stock went down, and it started just to go straight down. I mean, like, it was going straight down as if it was going to zero in 30 minutes. And once that selling exhausted, it went straight back up. But look what happened to the eventual trend. It's as if this area right in here, you take that out, it's like it never happened, because it just had this straight downtrend. Perhaps we see that if we go back to gold, and again, I'm using GLD, not the price of gold, but GLD, which corresponds with the move. Perhaps we see this trend go out, and we get some type of violent move like this, and then it just continues down. Certainly people that have been bearish on gold will go in there and try to buy it. People that trade gold will try to buy it. People that were short gold have to cover it at some point. So you may get some reprieve, but when you get this type of action, it's not just going to be going back up and we go back up to 15 or 1600 on gold and all's well. So gold was the big story of the day today. But, of course, it wasn't just the China data, which kind of set the stage for weak futures. We had a NHB housing index number that was weaker than expected, so the housing stock started to fall. And so the stock market was making its way down, tried to rally a little bit, wasn't doing it, just heading straight down. And we got to a point, I would say, about an hour and a half, 2 hours left to go in the day, and we saw this little move up. The Dow Jones went from about down, I think it was down 215, and then it was only down 140. And you thought, this thing's going to start rallying, and we may finish down 60 on the day. And we sold off very quickly right in here, and something felt like something was going on. And sure enough, the Bloomberg, all the news feeds start popping that there's this a bombing in Boston at the Boston Marathon. And, post 9/11, the natural reaction now in the market, and maybe it was like this before, but whenever you have any type of incident, the first thing traders do is hit the sell button because it could be a terrorist event. Now, what's a terrorist event? Well, we've thought of terrorist events as something that involves Al-Qaeda, somebody internationally that's trying to attack America. But a terrorist event can be some yahoo that is dropping a bomb in a trash can, unfortunately. So it is a terrorist event any way you slice it. But the bottom line is that's what caused the next round of selling, and then really just continued on as more news leaked that there was potentially more bombs, and casualties. And this is very, very sad. And on a day where the Dow's down 265, you come home and you look at your family and say, maybe the investments aren't something I should be paying attention to today, because things could be much worse. If I was up there training for months and months and I invited my family to come watch me run in this marathon, and lo and behold, you get injured or killed, or a family member does. So it's kind of the last thing we should be looking at. But it is part of what drives the market, and that's what happened today. It was really a combination of, even if that weak economic data didn't come out today, I think with gold going down, 8-9%, and silver down 11%, and different types of miners dropping 10%, the stock market's not going to ignore that. Even if gold was moving opposite the market, it's not going to ignore that type of crash scenario, and that's really what happened. And so the stock market just went straight down, as did really gold. It made a couple of little attempts to bottom, but for the most part, just never really did it. And there was a period in here where it started to sell off very hard, and then it kind of came back, and you thought, oh, maybe it's going to rally, and then it just kept on going down. So, and again, there's fundamental reasons why you could argue this is happening. Some people believe it's the start of, or the continuation of, deflation. Remember, most of us have worried about inflation over the long run, and it may still come. Inflation because of all the money printing by not only us, but the Bank of Japan, the Bank of England. You're talking almost $200 billion per month coming into the markets. And the stock market has absolutely loved it, and currencies have continued to fall outside of the U.S. dollar. Currencies have continued to fall. And so because of that, we've worried about runaway inflation. And yet here we are with commodities continuing to fall, and they've been falling, the dollar rising, gold going down. And we said, there isn't fear right now. There wasn't fear a month ago. Commodities were falling. The dollar was rising. And, so it kind of made sense why gold wasn't going up. But should it be plummeting like it is? I can't give you an explanation of why gold specifically is falling. You could argue that the Fed is accomplishing what they want because they're getting to print all this money and you're not seeing inflation, or are they failing at what they're doing and they're trying to fight deflation and yet they're not able to do it? We don't know yet. All we can do is, again, invest accordingly. And for right now, today is only one day. I do think we have a little further to go, simply because, as I said, this didn't have the characteristics of a day where it's a bottom. It's only been one day, and we didn't even have a 90% down day. And so when you're talking about the declining volume, when you're talking about the different issues on the New York Stock Exchange and how much they are down, we didn't see that. And we are obviously at this critical trend, and technically kind of broke it a little bit today. And so again, if we break that, next thing that comes into play, I'm getting kind of technical here, but is the 50-day moving average. And then we start coming down to where we broke out. And then, of course, the 200-day comes into, the 100-day comes into play at around 1,500, and then the 200-day at 1,450. So we'll just have to see. But again, this is what I've been talking about, is having your systems in place. Because I'm not positioned in a bunch of global growth stuff right now, because I'm not positioned in 100% stocks, I had some green on my screen. Not a bunch, but I had some green on my screen, have some cash, still have some things paying income. And overall, it's a bad day. It's very hard, as I said, to avoid a day like today if you're anywhere near the stock market. But what we have to do is see, is this a trend, or is this simply a one-day event? And it's going to, we're entering earnings season here. We've been going through it. And what we have to see now is, are investors going to really start dumping stocks, or are the buyers still going to be taking a break? And that's what we've seen. These last few selling episodes have been more a function of buyers pausing, not intense selling coming in these. And even today, again, selling was not as hardcore as you would have thought had you looked, again, underneath the hood of the market. So overall, we have to, I don't want to say take it with a grain of salt, but it's one day. So we have to see how it plays out. And if truly how strong this market is. Are people going to come in and just buy this who have missed out on the rally? And really, for the first time, we did see some things go down that have been holding up. Things like, utilities, which had been so strong. And we're actually up on the day, and we're flat, really, when the market was down. But when you got that last wave of selling at the end of the day, it took utilities down. We're down 1.5%. You had healthcare stocks, which, again, were holding their own. And then they fell on heavy volume, again, at the end of the day, down about 2%. We haven't seen a day like that in a long time. So that was kind of at the end of the day, people kind of tossing the towel. And then when you combine the fact that volatility, which has been very, very tame and may continue to be tame, but if you look at it, it climbed all day long today, and volatility jumped 43% in one day. And we haven't had a day like that going back, I think, since... Well, you can see it here, 2011, where it was up over 40% or so. So again, today was a day that your antennas go up and say, okay, do I need to change what I'm doing? I've got my systems in place. I already know what I'm going to do if certain conditions happen. So don't ignore today, but also don't overreact and go to 100% cash, because we've seen days in the past that look like, hey, this has definitely got to be the start of something, and then it turned out to be a blip. And I think what could turn the market around, obviously, is if we get some better than expected economic news. And so far, in the last couple of weeks, it seems like every piece of data that's come out has been just a little less than expected. Maybe not awful, but just underneath. People are wanting to be surprised to the upside. And what we're seeing is the economy in the last, again, going to China and places like that, it is a little worse than expected. And so is that a trend, or is it a soft patch, they call it? And we don't know. We don't know, and neither do economists, by the way. So again, stay focused on a day like today. You have to just throw it out if you're long stocks, because everything got hammered. And if you're, extremely light, as we've mentioned, and you've been wanting to get in, is today the day? I don't know if today was the day to go in there and buy the first down day. But when it's down 265 points and you got way too much cash, maybe you do take a stab at something and buy something, because if it takes off without you again, you're going to say, well, I should have bought down at those lows. And, when it comes to gold, I'm not suggesting that that's the trade, but surely there is going to be a bounce. Once the forced liquidation is over, there will be a bounce. Is it a bounce to get GLD back to 150 within the next couple of weeks? Probably not. But if those people that are bulls or gold bugs are really saying, hey, this is what we've been waiting for, it'll show up, because they would be obviously buying this dip. And certainly there was no dip buying today. So again, our prayers are with the people in Boston. Just a horrible, horrible deal. And I'm sure by the time you read this or watch this, you'll actually have more information about it. So have a great evening, and we will talk to you soon.